Broadcast. Welcome to the 30th episode of the Zaner MarketCast. 30 episodes. We were debating, was it 29, was it 30? I have a terrible memory. Carter says 30. We roll with 30, right? What do you think?
Yeah, I don't know. I feel like we said 28 on the last one, but I don't know. I don't want to be quoted on that. It's 30's fine. We can say 30
fine.
twice too.
Yeah, it'd be
I feel
30,
like everybody, you're 29 and then 29 and then 29 and then you never really. It's like I'm 38, this year. I'm not going to be turning 30, 40 here. So
that's what we'll do. We'll have our 15th, 30th episode. Yeah, that's very funny. Your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto. I'm here with
Dan Hussey, everybody. Welcome.
Dan, how you doing?
To the Zaner Egg Hedge. I'm great. Finally getting some sleep. That's all a guy with a new kid can do.
Before we jump in, I wanted to send a shout out to our customer and friend, JD, his wife, Nicole, JD's mom and dad, Sue and Big Jim. JD, Dan is here in Chicago on a bit of a healthcare journey. Got to visit with him for a minute yesterday and wanted to let them know that you and I, between the two of us, we're going to try to leverage all of our years of Catholic school. I think I have 9 years of Catholic school. How about you?
So third grade, carry the 2. What's that, like 12?
Yeah, right. So between the two of us, we probably got a couple decades of Catholic school. I'm going to leverage my schooling to pray the best I possibly can, send prayers heavenward for the best possible outcome and the speediest recovery for JD. I just wanted to say good luck and God bless to JD and the whole family from everybody here at Zaner Ag Hedge, and prayers out. Hopefully he gets in and out of that Northwestern Memorial as quick as possible. You know what I'm saying?
Mm-hmm, absolutely.
So you are
see everybody back on their feet right away.
Heck yeah. And I'll tell you what, he was cool as a cucumber, man. If I was in there for that sort of thing, certainly not a walk in the park, everybody would be hearing about it, but it looked like that guy was just hanging out another day, walk in the park. And I don't know about walking in the park in Chicago, but he was cool as could be. His wife was nice as could be. And yeah, right. Yeah, exactly. Good luck to JD. We are going to talk a little bit about some market news today. We are going to talk a little bit about market technicals, and my thought is, Dan, we could jump right in. What do you think about taking the first news story?
Yeah, in Wisconsin, senators urge aid to farmers after poultry processors collapse. A story from Chris Clayton and DTN. Prairie Poultry Shutdown. Wow, these alliterations, Carter, our producer. Thank you.
Yeah, right.
Prairie Poultry shut down at the end of September when its federal bankruptcy case was dismissed by a federal judge. The Minnesota-based company had received $38.7 million guaranteed loans from the USDA. Wow, that's money well spent. And $6.9 million in grants to reopen a processing plant in Charles City, Iowa in 2023. Bankruptcy filings stated that as much as 50 farms in Iowa, Minnesota, Wisconsin were growing chickens for the company when it failed. Prairie Poultry officials wrote letters to officials in each state warning them that the company would no longer afford to feed for the broiler flocks. The USDA on Wednesday also said the department, in close contact with the State Department of Agriculture, is on the situation. Farmers should contact the local Natural Resource Conservation Services, the NRCS office, if they need support dealing with mortuary assistance, the USDA stated. USDA also added at the same time the number of producers who relied on the market underscores the need to explore the need to explore how the facility might continue to assist in the return to profitability, with the USDA to continuing and assisting in farmers in western Wisconsin. We have who have restored giving away tens of thousands of broiler chickens, mainly by connecting with people on Facebook. The Wisconsin Department, now that's pretty cool, I have to say, right? The grassroots startups, got a problem, social media solves it. The Wisconsin Department of Agriculture, Trade and Consumer Protection told farmers the state did not have a statutory authority to assume control of the birds because the situation was not tied to animal disease. Well, that just seems like, oh, here, we're leaving you up a creek without a paddle, right? But the state also did not have funding to feed the flocks. So the USDA stated last week that the department was collecting information to determine if there are valid dealer trust claims that could be pursued under Packers and Stockyards Act. The USDA also is working with lenders on the $38.7 million USDA guaranteed loan that had been granted by Prairie Poultry. Well, that is just, I mean, layers of financial issues on top of now poultry farms coming under fire. That's not something we want to hear at a time like this.
And getting some chickens off of Facebook, that's
That
a
that
pretty
was
wild
the
deal.
silver lining, right? That's the silver lining of this. The rest of it is just unfortunate news. But that's the cool part of that story, right? Is that in agriculture, you do have the ability to hop on social media and you've got a product that is in demand. You just got to find your farm to table approach that social media can apparently, facilitate, right? That's amazing.
It's incredible. Consolidation
Yeah,
continues
pretty cool.
in seed industry. Jason Jenkins from DTN says in 2025, farmers in more than 20 states will have fewer brands from which to choose. Bayer announced its plan last year to consolidate 10 regional seed brands under its channel line, eliminating Fontenelle, Gold Country Seed, Hubner Seed, Jung Seed Genetics, Kruger Seeds, Lewis Hybrids, Rhea Hybrids, Specialty Seeds, Stewart Seeds, Stone Seed from its seed portfolio. Many of these brands began as family seed businesses decades ago. Some had been around more than a century. Bayer said the move enables the company to strengthen dealer relationships and allows for further investment in agronomic support and products that will benefit customers. And just to break in here, Dan, like this is kind of the story in ag
Sounds like
in
organization.
General, right? Yeah, right. I mean, this is kind of the story. Small family farms, folks age out, have difficulty finding new youthful participants.
And it's amazing how many seed dealerships there, or seed lines, seed producers, et cetera, or whatever, have obviously for the last several years been just doing business as Bayer, right? Like they're just selling a Bayer seed. If Bayer is quickly right to just eliminate these regional brands, they were nothing but a Bayer distributor, right? That's why,
Well, that's a good
what
point.
were you
That's
really selling at the end of the day?
And it's funny because that's what it says. It continues a trend within the industry that began when the first genetically engineered traits were introduced to the market in the early 1990s. Exactly what you just said. Since then, more than 200 seed companies have been acquired or gone out of business, according to a March 2023 report from the USDA Agricultural Marketing Service. The result is a concentration of market share among 4 seed companies. The June 2023 report by the USDA Economic Research Service, the ERS, found that when combined, Ag-Reliant, Bayer, Corteva, and Syngenta accounted for 83.4% of corn seed sales and 78.1% of soybean sales in the United States from 2018 to 2020. That's so that was 2018 to 2020. It's 24 now. I wonder how much more concentrated that is.
I hate to see concentration, right? Because I love competition and the capitalist spirit. But unfortunately, this is what happens when you have a marketplace where product is that good, right? I mean, when the competition is for 100%, right?
Heck ton of money that they spend on R&D, and it's difficult for maybe mom and pop shops to keep up. And
absolutely.
So
but look at what the product
place.
produces. You got to also produce a product that's going to give you pushing that trend yield line every year, right? That's what people expect.
That seems to be what's happening too, doesn't it? Certainly seems to be what's happening. How about some numbers? Weekly, D's corn opened up at 415. High was 415 and a quarter. Low 399. Last trade I saw in the D's corn, Dan, 404 and 3/4. Down 11 on the week. Funds short. What did you tell me? 65,000 contracts. Now, let me ask you this.
That's right.
So coming into the day, we estimated 65,000, maybe a little more after today's price action, huh?
Maybe, but the last 2 days of price action probably was some short covering, I would say. So I wouldn't say that number is too far off, maybe, right? Like a little cancellation on the books there.
Sure.
But corn was kind of the silver lining today, and I think a big reason we held up was that really strong export number we saw this morning.
Really strong,
above trade expectations. That's great to see. Unfortunately, I think the beans were down so hard almost in retrospect because the beans export wasn't that bad, but like it's almost like, oh wait, that wasn't the bean export. Darn. You know what I mean? Like I wanted to see that $1 million swinger, that big one for the beans, or 2 million bushel for the beans that could really turn your head and make the demand bulls come back in full force. And it kind of makes the last couple days just look like a bit of a short covering rally.
50-day at
407 cap.
407 and three quarters.
Yeah, a 55-day at 407 a quarter. I was going to say,
Okay.
kind of been
Sure.
capping the market the last 2
Yep.
days. We seem to have broken below all those other major trend line or moving averages. This is the last one, so to speak, that we've been now below for 3 days and settling the week below. Doesn't leaves me with a little bit of a pit in my stomach. Certainly,
Held
when I
above
then go and
4.
look at held above which one?
4. We held above 4. The round number, the
Oh,
$4
$4.
round number,
Yeah,
closed
certainly,
this week above 4.
certainly.
Minor positive detail.
Yeah, absolutely, right. The little things are what matter like this. But then, when you look at beans and wheat, it's like, who's to tell?
Beans opened the week at 10.02. The high was 10.08 and a half, low 9.68 and a quarter. Last trade 9.70. That was down 35 and a half on the week. Funds short about 45,000 there again. You might be right. Could be a push after yesterday's price action. Dan,
but generally going out at the
sight.
lows of the week, right? You got to think that fund number's gotten a little bit bigger.
Recent lows 9.55. We closed the day at 9.70. We closed the week at 9.70. 15 cents back to those lows. What was that? August. I can't remember the date. I had it written down last
the 19th.
week. Was it August 19th?
August 16th. August 16th. Friday to Monday there. I'm getting Monday was the 19th. Friday, I think, was the 16th where we bought them. That was the day.
Harvest pressure does not appear to be abating. Does it lighten up next week? I mean, what are we seeing here? Technically, I don't see anything.
No, I mean, I don't see any reason why you don't test that. I mean, volume's been, generally speaking, building in this decline. So you've seen, I would attribute that, and you hate to call it anything, but that's hate selling. That's everybody coming out and saying, no, 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 piling into this short. And funds are going to probably, and I was alluding to earlier, probably going maybe even higher than what we expected there on that added short, because we went out the week basically at lows, and it looks like we're going to strike that contract low at 9.55. It'd be shocking if we didn't at this point, to be fair. We're below all of our moving averages, even the most aggressive, like 8-day or 7-day, which is basically at highs of the day around 9.22. An outside day higher, right? We traded a higher high, but then, I'm sorry, it wasn't an outside day. It was still higher highs and higher lows, even though it was this big red candle. I'm kind of shocked that, November beans didn't take out that low today. But I guess they got to leave you with something for Sunday night, huh?
I'll tell you. Wheat opened the week at 598 and a half, high 601, low 570 and a quarter. Last trade 572 and three quarters, down 26 and a quarter on the week. Funds short 31,000 May, laying on the 50-day, 55-day moving average 572-ish. Failed at all the rest of the moving averages. There's all of those intermediate term. What is it? 10-18, and I think there's a
18-day. There's a 100-day. The 18-day is at was coming in at 592. The 100-day was at 590. We're the cluster of resistance that we found basically the last 3 days, and we fell away from today. Unfortunately, that was where those moving averages were that we've proverbially fallen below, tested as resistance, and have now gone down to find the next big one below us. It's good to see the 55 and the 50-day kind of halting us, because that would be a major line in the sand, I think, for this trend in the near term. And let's not forget too, this is also basically support from middle to end of September, when the market had pulled back for the first time after breaking above some of these levels. Its first pullbacks were held around this 560 mark. So we'll see. I'm hopeful that we can maybe pull it together, but boy, does that look like a rounding top. And it's certainly a series of lower lows and lower highs, day over day, and maybe even now week over week.
You and I always say hallmark of a bear market is the inability to close over those shorter term moving averages.
Yep.
It's not a great look for wheat for those who are paying attention. Not great at all.
No.
Anything in cattle, Dan? Cattle today, positive price action.
Positive price action today, but generally speaking, the last few days and the last week was lower. So, the bounce we saw could certainly be enough to unwind that downward pressure and maybe even begin a little bit of a bull flag here. The 18-day moving average being supportive there on December cattle around 186 lows of today. November feeders, it scurried back above it to actually close back above at 147, 37, 130, or 247, 37, 230, 247, 40 area where that 18-day moving average was. So both our front month cattle markets right now are starting to push, after maybe a fake head fake break below, coming and scurrying back above those levels. That would be what you'd expect to see, and momentum through higher next week if we're going to continue higher. If not, and this is where the dance stops, we would expect to see the market roll over because there is bigger resistance and larger levels that we've been running into over the last several weeks that have been otherwise capping the market. However, today was the first run that the bulls had to try to break through those levels again, and they're leaving us, basically leaving us wishing and wanting to see what happens early next week.
And certainly a phrase that you have been heard to utter often, wall of worry. If you have paid any attention, we see a number of analysts come across the screen throughout a week. Almost every one of them say the kind of things that you and I have been saying. Hey, price action appears to be resilient. Market appears to be resilient. You look at a lot of the internal numbers, and those do not point to this kind of resilience. And so folks are saying, hey, listen, prices are holding up here, but you have to begin to think about what could happen, and we're coming into a month where I think it's a non-delivery month. Certainly, maybe check me on that, but where maybe the funds, where the funds get to take over, and we might be sliding precipitously down this wall of worry. And in terms of, we have been talking about maybe an educational component, and if we could maybe just shoot from the hip real quick. So if you have exposure, or you're looking at a cattle chart, Dan, and you say, okay, I have to protect this. And just in
great
generic
opportunity
terms,
to talk about what to do for producer price protection, right? Like, we're still at prices that you'd be happy to sell at, let's face it, right?
We are not offering any specific marketing advice, right? We are not offering any specific marketing advice. Everybody's situation is different, and we are not sure. We would love to speak to somebody if they think they have risk. And my feeling is if you have cattle, you have risk. So let's talk about mitigating that in the simplest of terms, right? We're talking about just simply a put option.
Yeah. I mean, right now, those major levels we talked about that we've been fighting over, like in the trend, that can easily become a level and a floor in the market from a technical standpoint that maybe you'd run a stop as a speculative trader. Well, why doesn't a hedger use that same perspective of, let's put a put option, use a put option to put a floor there? We're not speculating in terms of the position because we're hedging what we want to do, right? I'm hedging production at 186 and just using, the December fat cattle right now with a nice easy strike. That's very high and tight, right? That going to cost you a lot of money because it's pretty close to the floor. That insurance policy to have protection at 186, which is only, 130, $1.30 from the close. That's a pretty high and tight order. There's other ways though of helping maybe pay for that by turning it into a put spread, where then you simultaneously sell a put further down. Because, hey, the 176 level has been rather supportive over the last year. A 186, 176 put spread might make sense for a way of capturing not only the range that the cattle market has been, but also getting a floor for the producer at 186 and helping the market having the market help pay for it with that 186 put below it. And so those are things that Joe and I and anyone over here at Zaner could certainly talk to you and help you with.
We see a lot of producers that will just use futures, right? They'll say, okay, hey, I'm gonna lock this in. I'm gonna sell futures here. We're not talking about that, right? That has benefits because you get a lot of bang for your buck, kind of dollar for dollar exposure to the downside. One of the negatives to that is it opens you up to margin calls if the market continues to rally. One of the neat things
And in
about put
theory,
options.
unlimited risk too, right? If futures position without a stop in is exposing you to, well, either down to zero or infinity in terms of how high price can go. And
Right,
hey guys,
right.
we've even seen prices go negative. So,
One of the ways one of
being
the ways
long the market
producers
doesn't mean that it can just go to zero and stop hurting you.
one of the ways producers can mitigate that is by simply buying a put. And the neat thing about buying puts is that there is still risk, of course, but the risk that you take on with with that option, with buying that put, let's say you spend $1,000. Let's use a round number. You spend $1,000 to buy that put. That is the extent of the risk on that position. And so,
Right.
Far be it for us to lecture farmers about taking risk. Just the simple fact that they exist in a risk-filled life day to day. This option,
I wake up in the morning, right?
exactly. You're going to spend.
Seed in
You
the
already
ground.
have a position. Sometimes you talk to people and they say, "Oh, I don't. I'm not sure about puts. I don't really want to trade." And you think in your head, you think, well, you already have a trade on. You are extremely long the board, which is neither here nor there. We're not here to talk anybody into hedging, but what we are saying is that with that option, you can spend X amount of dollars, and that is all the risk that you have on that option. So if cattle continue on and trade to the moon, your insurance policy, your option, of course, the value of that is reduced or even trades to zero, but your risk didn't change. You spent $1,000 for the option. You won't wake up tomorrow and have $2,000 worth of risk on when it comes to the option. You still have risk with the animals, but you're mitigating that with a quantifiable risk with that put option. Possibly for some producers an oversimplification, other people taking on more complex strategies. We'd have to speak with somebody, right? You yourself tell me you'd have to speak with somebody to know what they got going on. There can be some complexities.
Absolutely. I mean, when you're speaking in general terms, right? Oh, I know you have cattle. We could try to sell it for the highest price possible. Yeah, sure. We're all trying to do that. But when we're looking at a true risk management solution, right, we need to be concerned with what some of your input costs are, what your revenue stream might be, and what we need to cover on different sides of your balance sheet. It's not as simple as just selling cattle on the board, right? It never is and never will be.
And some people want to make it that simple, and certainly they try. But if the market continues to move higher, then and if you don't mind meeting margin calls, it's no big deal, right? So just meet the margin call and go about your business.
And a great example of any of that is like how forward sold are you in terms of forward contracting, right? Some guys actually are well protected in the cash markets, but then that could also mean that they're leaving, re-ownership on the table, right? You don't have any further upside that you might want to look at. And that's something we can talk to you about too, but that's another story for another day, right? Like Joe just said, it's all about an objective look or subjective look, excuse me, at your risk management needs.
How about question of the week?
Question of the week.
Question of the week. What?
Gotta be running out of things to ask us at this point.
We really do have to be running out of things. I mean, how much more stuff? I'm still
focused. It's gonna get weird soon, and I don't know if we want to
keep weirder. Obviously, I'm still focused on the sandwich question. You know what I mean? You could just tell by looking at me that I spend a lot of time thinking about sandwiches, which is terrific. I'm going to go and have a sandwich right now when we're done with this. But before I do that, what is the best piece of advice you would give your younger self?
Oh, wow.
You think about it.
What layer of the onion do I want to peel back today?
While you think about it, I'm going to shout across the room to producer Carter and say, fire up an answer. Carter, what is the best piece?
Right?
Now, the problem with that is Carter is his younger self. You know what I mean? I think he's like 16 years old. So what is he going to play more PlayStation?
No, I would have told my younger self to definitely hunker down, save more. God, I spent money when I had it when I was younger so stupidly, right? Like, I did things that today I'd be like, why would you do that? Like, imagine what you could do now. How many diapers does that buy? Like, just this different perspective.
A lot.
No, I mean, but generally speaking, I feel like I don't have many regrets in life, so I'm happy about that. But yeah, maybe just, dude, you could have been a little bit smarter with your money. I think we all could have been, right? Like, And if money is time, that equates that could have been better with my time.
I've made so many mistakes, and there's so many things to advise me on that.
But do you regret them?
Well,
you see, Joe, I appreciate the man I've become because of those mistakes and the scars I've gotten. You know,
certainly.
I don't know if I would change much. Because
I might have done a few things differently, but and along those lines, I think as I get older, one of the things and something that I kind of have recently learned is that these mistakes, they're iterations, right? And so mistakes are part of the process of success, and not extreme, horrible failures that one should dwell on every day for the rest of their life. Tend to be a little hard on myself.
That's life.
Yeah, right.
That's
and so my advice to my younger self would be: you're going to screw up. Try to make it, try to admit it and fix it quickly, and don't let it hang out.
I like that.
But recognize that mistakes are part of the process. And
I like that a lot.
And so that's what I would want my younger self. That's what I want my regular today self to remember. When I screw something up tomorrow, hey, take it easy. Let's try to get it fixed, and let's move on to the next.
That's a great message right there, Joe. I think everyone can take something positive away from that one. Wow. I mean, on that note,
Absolutely.
if you just can't get enough of us, by the way, thanks for listening here at the Zaner MarketCast. And if you can't get enough of us and you want to follow us on Facebook at Zaner Egg Hedge, or on Twitter and LinkedIn at the Zaner Group. We need to get on Zaner Egg Hedge on Twitter and LinkedIn, I think.
How about the hotline? I think you're right. Yeah. How about the hotline? Right? Tell me about the hotline. Does it cost anything?
It costs nothing. So if you want to hear more from us, check that hotline out. The link is in the description and in the message below. Sign up, people. Enjoy Ted's Seifried or myself or Joe, whoever's giving it for the day's introspective on the market. Thanks again, and be sure to comment and like the podcast, and to not miss a beat. Back with you as price action develops. Take care, everybody.
Go get him, JD.